Okay, so gonna look at part A of this video. Already done in part B. Um, I think it might be the worst idea in the world to prepare yourself to do question 8 as well as question 9. Um, Obviously, what came up last year, if you look at the 2019, it was a full job costing question. So that only leaves three things that could be asked, and they're all very short and very straightforward. One of them is this part of job product costing, which I showed you the video of earlier, which is just really calculator work. Um, the second thing is stock valuation, which we'll do now, and the third one is under and overhead apportionment, which I will show you um, shortly enough as well. This stock valuation is exceptionally easy. I know I say that quite a lot about things, but we're asked to do two things. Um, Basically asked to calculate the value of closing stock on a first in, first out basis and prepare a trading account for the year ended. Now, what I'm going to tell you to do is basically work out all these sums here. That's what we're going to do, right? So, they all sort of, we do them all, we'll do this question all at one time, right? So, this is just calculator work, right? So, we're just going to go purchases. Now, it's quite important that you show units and price. Uh, okay, so it's 4,500 at 8, 2,500 at 7, 3,000 at 6, and 1,500 at 5, right? So we're going to do those sums. So 4,500 by 8, uh, 2,500 by 7, 3,000 by 6 will be 18,000, and 1,500 by 5 will be 7,500. And then we add up our units. So 4,5 plus 2,5 plus 3 plus 1,500. That gives us our total units. Sorry, I've done that. So that one was 1,500. So our total units are 11,500, and our total purchases then are 79,500. We're going to do the same then for sales, right? We're going to do all of these 8 sums here. Now, sales, so it's 1,000 by 10, 2,000 by 11, 1,500 by 13, and 1,000 by 12. And then we're going to go into the cash sales, just continue on. 1,200 by 12, 1,400 by 13, 1,800 by 10, and 1,200 by 11. Okay, so we're going to do those sums out as well. Obviously, I can do this fairly quickly. Okay, so that's all those done. And you do the same process. Add up your units that you sell. Add up your total sales. All right. 127,300. Next job then, we're going to work out the opening stock. And that's 5,000 units at €6 each. And that's 30,000. So the last thing we have to do is work out the closing stock units. So what we do, we have to see how many we've left over and then how we value them, right? So if you think about it in units terms, opening stock plus purchases, that'll give us how much we had. So our closing stock here. So we have an opening stock of 5,000 units. You purchased another 11,500. So that gave you 16,500 available for sale, of which you sold 11,100. So your sales are 11,100. So That'll give you 5,400. So that's your closing stock in units. Okay, so we know how many units we have. Now we have to value them. Now this is the important thing here. Weston is retail. Sorry, it doesn't say that. Part A, the question: calculate the closing stock using first in, first out basis. What first in, first out basis is, like if you think about a business, say selling cans of Coke, and the fridge has been stocked, um, and say you buy some Coke at 8 cents and some at 7, and some at 6, and some at 5. You're selling them at different prices. It's completely unfeasible to suggest that you're going to sell them in that order. But what we have to do in accounting is come up with a consistent way of valuing closing stock. So what we say is we use the first in, first out method. So what we assume is that the first 4,500 that we sell at €8. The next 2,500 we sell so are the ones that we bought at 7. The next 3,000 are the ones that we bought at 6, and the next 1,500 are the ones that we bought at 5. That is probably not what happened, but that's how we calculate it. So the value of the closing stock, we've got 5,400. So we work backwards. So that closing stock of 5,400, the first 1,500 of that 5,400, we say are the ones that we bought at €5 each. So working back upwards. So 1,500 by 5 is 7,500. That leaves us with 3,900 left over. So we go back up to the next 3,000, and we could say that of the 5,000 or of the 5,400 left over, we bought 3,000 of them at 6, and that is 30,000, 18,000. And then we can say, so we 4,500 of the 5,400. So we still have 900 that we have to value. So we've done 1,500, we've gone 3,000, so we've got to 900 now at €7 each. So that's 6,300. And that gives us our 5,400. And the price is the three of them added together. So it's just like sort of a reducing balance. You work back up the way. So of the 5,400, 1,500 at 5, 3,000 at 6, and then 900 at 7. So we've 900 of this 2,500 left over. And that gives us a closing stock value of 31,800. And that in effect is our question finished, right? So all we have to do is put them together in a trading profit and loss account. So sales, opening stock, purchases, and closing stock. So our trading account. We've got sales of 31.8. We've got opening stock. So we know the opening stock value is 30,000. This is for our cost of sales. Our purchases, well, that was the first thing we worked out, 79,000. Sorry, sales is, where am I going? Sales is 127,300. Sorry. Opening stock 30,000. Purchases 79,000. And then closing stock is the number we just worked out. 31,800. Normal trading account, opening stock plus purchases minus closing stock. And we just take them away from each other to get our gross profit. And that is it finished. Okay. The prudence concept of and valuation of stock, would you believe in this question here, it was only worth 1 mark. I'm just looking at a marking scheme here. So the prudence concept is the whole idea that you always exercise caution when preparing accounts. And you only book profits when they occur, not when you expect them to have. So what does it say about stock? The prudence concept doesn't say stuff about first in, first out. We know what it says from published accounts. We know from our question 1 that the prudence concept says that stock must be valued at the lower of cost or net realizable value. The reason for that is that you always have to assume the worst. So as you cannot book profits until they are realized, and you must assume, or you must exercise caution when preparing accounts. Okay, and that's it done, right? So the stock valuation, would you believe, that whole thing was with 50 marks. You could, well, on a laptop, you could do that question in 2 minutes. It'll probably take you no more than 10 minutes to do that question. There's a video I posted already. It'll be somewhere in it of how to do this. This again is just calculator work. So all you're doing is you're trying to work out the costs associated with the job and work out variable overhead costs per unit. So I might actually just continue on and just put it all together. Calculate the variable cost and fixed overhead absorption rates for each in direct labor hours. So all we do is for department A, we take our cost variable, we've got 20,000, we're going to divide by 500, and that'll give you whatever that is, 40 euros per hour. So that's your variable. Your fixed is 22,000 divided by 500. It's just divided by the number of labor hours, which is 44 per hour. For department B, same thing. Variable is 18 divided by 1000, which is 18 per hour. And fixed is 23,000 divided by 1000, which is 23 per hour. And department C, variable is 21,000 divided by 1400, which is 15, and fixed is 42,000 divided by 1400. And that's 30 per hour. Okay, so that's part one done. Calculate the administration overhead in direct labor hours. So administration is like your health and safety officer, maybe your secretarial expenses, your accountant's expenses. So it gives it here as 55,100, and what we have to do is divide by the total number of labor hours. So 500 plus 1400 or plus 1000 plus 1400. It's not per department, so it's divided by 2900. That's 19 per labor hour. That's part two done. And then calculate the selling price of the job. The selling price of the job is all of the costs associated with it, which is this table here. So it gives you the hours, it gives you the direct materials, and it asks you to work it out. So your costs, all right, for this job will be, first of all, your direct materials. Straightforward enough. 70 kilos you need at 16. Okay, that's your direct materials. The next thing we can say is that we have variable overheads. Now, what do we have? We have a cost per hour. So for department A, the cost per hour is 40. So it's going to be 40 by the number of hours, which is 50. 40 by 50 which is 2,000. For department B, your variable overheads is 18 per hour, so 18 by 120. And for department C, it's 24 by 15. Okay, that's your variable overhead. Your fixed overhead, this is just taking the answers from up above here. Same thing. So department A, it's still 50 hours. So 50 hours, except this time we're multiplying by 44. So 44 by 50. I'm just going to reverse that around, 15 by 24. So 44 by 50. Department B is your fixed overhead is 23 per hour. So 23 by the number of hours, which is 120. And for department C, it's 30 an hour. So 30 by 24, which is 720. You then have, so that's your variable done, your fixed. The next thing is you have your wage rate. So you obviously have wages, your labor costs, same number of hours, except different rates. So 15 by 50. You've got, just move that down. That's for department A. For department B, it's 26 by 120. And for department C, it's 34 by 24. Okay. Just add them all together as we go, sorry. Oh God. Sorry. Not sure how that happened. So last job then, and it's the one everyone forgets, it's the administration. So the administration we worked out per hour is 19, and the total number of hours is these three added together. So you could do 19 by 50, 19 by 120, 19 by 24 if you want, but just 19 by 194 will give you the same answer. That's 3686. Add them all together. And that is your job cost. So that is your, I suppose, job cost. Now, tells us that's what it's costing us to do the job. Tells us there's that the selling price is if the profit is set at 25%. So the profit of the selling price has to be 25%. So if the profit is 25%, the selling price is 100%, which makes this 25%, which means the cost of the job is 75%. So 75 equals 19,692. We have to work out 25 and 100. So we take the 19,692 divided by 75, multiply by 25, and then add those together, or take the 19,692 divided by 75, multiply by 100, and you get the same as adding the two together. That's the selling price. So that's that done. Last part then is the role of the management accountant. So the management accountant prepare budgets for the business. They help set prices for jobs. They do all the stuff we're looking at here. They provide data for decision making for managers. You probably need a couple of them. They set cost centers and control costs for the business, all that sort of stuff. It's the day to day running of the business rather than the end of year um, running of the business. Okay, so that's that. That's that entire question done. I'm gonna I'll probably look at that actually because I just looking at the way the questions have come up. There's only really three things that can be asked apart from marginal costing. So just to cover yourselves for question eight and question nine, I'd like to do this. So I think marginal costing will get asked. Um, question nine, it could be one of three or four different types of things. So we'll cover the rest of it as we go. All right, we'll see you after the midterm.